Well, good afternoon, everybody. Thank everybody for joining in today. And we're going to have a good workshop. We're getting towards the end of the year now, so it's really important that we start planning some things out going into next year. I think all of you, or a lot of you, realize from a lot of the conversations we've already had that we're going to be seeing, I believe we're going to be seeing some more changes next year, and it's going to be good. I think we're going to have some great advantages coming our way, some great things happening, and it's going to be really nice to be prepared going in, and being effective as a real estate investor. I think is really important for all of us to take that role and take it very seriously. And as we do that, then we'll start to benefit ourselves much more with everything that we've got going on, and be effective. So, I know that we're letting everybody get tuned in right now, but I know we've got some people on. I'll get going here in just a second, and like I say, we're going to also do an additional workshop on the 30th because we won't have our meeting on the 25th because we fall right on Thanksgiving, and obviously none of us are going to be here for that meeting. And so we'll do an extra lunch and learn. But going into the end of the year, we're going to be talking about ways to be really effective and really kind of help strategize what we're doing, and have some much better success of what we're doing. So with that being said, I'm going to turn my camera off here, and we'll get going on this thing. So being an effective real estate investor is very important. And I'm going to go into a lot of things that we do, a lot of things we've done, the way we think about things, as always. And, as we go through this, whatever applies to you, take that information and then put that information into your situation for what you're doing. And as always, we are always here to help you if you've got questions. I've been doing a lot more consulting on this side of the business lately. So if you need some consulting, reach out, and more than happy to get with you and see what we need to do to get you moving forward, keep you moving forward, go to the next level, or whatever the case may be. So we'll get going here. So as always, I need to always do my little disclaimer when we get going on a presentation like this. This workshop is going to be for educational purposes only. I'm not going to be giving you any legal or accounting advice. For any of that type of advice, you always need to consult with your attorney, with your accountant, with your CPA, and they're going to give you the proper advice because they're the experts in those fields. This is education is that I'm sharing with you is based on my own experiences, as always. And I can't ever say it enough, but before we ever get into any type of investing, it doesn't matter what level we're doing this, what we're getting into, it never matters. We always need to do our due diligence to make sure we're keeping ourselves in the safest place that we can out there in this world. It's a crazy world, lots of going on, and our goal is not to go out and lose money. Our goal is to go out there and be successful. So with that being said, let's get going here. So what makes a person a real estate investor? So being a wholesaler does not make you a real estate investor. You're not buying anything as a wholesaler. You're not putting anything into it as a wholesaler. So it doesn't make you an investor, although we're going to talk about what it does do for you, especially what it did for us in the beginning when we started in this business. And rehabbing properties, that's I think that really kind of falls in the same category where we're working in real estate. As a wholesaler, we're working in real estate, but we're not investing in what I consider an investor to be. Even though we're putting money to work, even though we're making money and profiting from it, it's still a critical part of what we do, but it doesn't necessarily put us in that category of investor. Investor is someone who puts their money to work and lets the money work. You own things. We're going to go through all that kind of stuff today. So, I just think it's important that for me to clarify that, because I think there's lots of misconceptions about that. I hear wholesalers talking all the time about they're real estate investors. Well, they're in the real estate game, but they're not investors. They're not investing in anything other than getting some properties under contract and trying to assign that contract to someone else. So with that being said, though, wholesaling and rehabbing houses to reach your investment goals is a very important part of the puzzle in many, many cases. And it certainly was for us. In the beginning, when we got into this game, when we seriously got into this game, that's what I did. I was a wholesaler, and it really taught me an awful lot about this business. I think it played a major role for me in what we do today. By wholesaling in the beginning, it really put me out in front of a lot of sellers face to face, negotiating on their properties, solving their problems, learning how to walk properties, how to estimate repairs. I mean, it played a huge role in what we did. And I knew in the beginning that was the stage we were at. It wasn't our end goal or where we wanted to be at the end of the game, but we never start at the end of the game. We have to start at the beginning. And this was a great place for us to start. Over the years, wholesaling has become a very different game, but I think we're going to have opportunities in the future taking wholesaling back much more to what it used to be. I'm certainly hoping that we see more of that. So there was great benefits in that. As we started rehabbing properties, it was the same situation. And we still rehab properties to this day, but I'm trying to do, our companies have grown tremendously, and we do many, many other things besides that. But these were great stepping stones that we learned lots and lots to get us to the next level. And obviously rehabbing taught us about fixing houses. It taught us about the levels of rehabs we had to do on different types of properties and different neighborhoods and different areas. And it also allowed us to go out and learn a lot of different areas. I mean, I know so many neighborhoods throughout this town that it sometimes it amazes me, but that was because I got out there and I learned these neighborhoods, and I learned how to do rehabs specifically to the neighborhoods and areas of town that those were in. So, may not have made me a real estate investor at that time, but it played a huge role in getting me to where we are today. And then, when we really started to become what I consider real estate investors was when we started stepping into owning rental properties, because now we were putting our money to work, and that money was working in a situation where we even though when you have rental properties, it is a job and you do work for it, but you're putting your money to work, and the money's working without you going out and hustling every single day for that money to work. So that was the big differentiator for me. And I think it's important that we think of it that way. Not that there's anything wrong with wholesaling, not that there's anything wrong with rehabbing. We've done both, and I'll do both to this day. But they were great stepping stones to get us to become investors. And I think if you start thinking of it that way, it also helps you determine better where you want to go and clarify what your end goals might be, because we're all different. We're all going different places. We're all going to have different end goals, but these are great ways to define that. As we go through this today, you're going to see what I'm talking about. So new markets bring new opportunities. And I truly think we're going to be seeing some new opportunities out there in the coming year, and hopefully the year after that. We're seeing just tons of changes in the markets out there right now. A lot of people are saying that the markets are going to crash around us. I really don't personally think that that's going to happen. We're seeing adjustments. We're seeing stabilization. We're seeing a lot of that happening right now. Do I think we might see some drops in values going into next year? It's quite possible, due to a lot of factors out there in the world. There's lots of layoffs happening. I saw an article yesterday from one of my friends, and I can't remember the name of a big lending company, that announced that they're going to be shutting the doors over the next few months, they've got, they said that they would honor all the loans they've got in the pipeline, but they're not taking on any new loans. Once they get finished with the loans they've got in the pipeline, they're going to close the doors because of the volatility in the market, because of interest rates, because of inflation, so many factors. And I know that we're seeing that on the news. But what we have to understand is we're investors. We're sitting in the place where these interruptions, these changes benefit us. We can take advantage of these things happening as we go through them. So being prepared going into the future is a really, really important place to be. And that's what we're going to be talking about today as I go through all this, is just think of it of how do you get yourself prepared for what is to come? Because I think we're going to have some great opportunities, like I've said several times so far. So, so what are some of the smarter investment deals we should be looking for? Well, it's been really tough to rehab properties and, to find them where we can buy them right to rehab them and make a profit, not lose money. So I think we might see some more opportunities for that, but we've got to keep in mind when prices drop, if they drop, or when we see more stabilization, which I think we're going to see, it might be easier to find properties to buy, but they're going to probably be sitting on the market a little bit longer. It's going to take them a little bit longer to sell them. And if you can talk to realtors all over town, and they'll tell you that that's happening right now. I think HAR put out a report that sales and everything are down about 30%. So we have to be aware of that, but that also brings great opportunities for rental properties, especially if we see prices drop a little bit. We're starting to see some opportunities in the commercial classes as well. Still not seeing it in multifamily like I'm hoping we'll see, but we're seeing it in strip centers and single tenant buildings. There's other commercial asset classes out there that I think we should be paying attention to, because cap rates are rising, which means prices are dropping on them. So that could be a very good opportunity for us going into the new year. Things we might look out or be a little more cautious about. I've got people coming to me almost every day wanting loans on new construction. And I got to tell you, new construction is one of the most volatile things going on out there. And if you look at the big builders out there, they're slowing things down tremendously. Let's look at what the big guys are doing and follow that example, not follow the example of TV and think we can go out and build new houses and build townhouses or build whatever and make a profit, because values are dropping on those types of investments. And those are some things that I would be much more cautious of. I know everybody wants to go out and build something, but if you're not very experienced at doing that, it's going to be very difficult, and you could get yourself in really big trouble. And obviously that's what we want to try and avoid happening to us. We don't, like I said, we're in this to make money, not lose money. And I think that that's probably one of the big things I see that I would be very cautious of. And as you're buying, no matter what, as you're buying properties, the numbers are going to be becoming more and more critical on the correct ARV, and knowing your neighborhoods and looking at more than just the information of your ARV based on price point. There's a lot of other factors out there. And Eddie Gant just put out a video yesterday, a very, very good little video, about a 5-minute video on ARVs. And I listened to it and I thought he was dead on. So we need to be really cautious of that kind of stuff. So just throwing that out there to you. So something else I think that's important that we kind of define in who we are and what we want to do is, do we want to be an active investor or do we want to be a passive investor? I know because of everybody that comes to me because of TV, everybody wants to be active investors. I think, because it's glorious, it's glamorous, so on and so forth. And the reality is it's really not that glamorous. And it's a lot of hard work, and a lot of things can go wrong. And if we're not the right type of person to be able to do a rehab with our skill sets, our knowledge, our risk tolerance. There's tons of factors involved. Then I think it's important that maybe we look at different ways that we can be a passive investor, put our money to work for us. That really, in most cases, is the best thing for most people to do, especially if you've got a good job, you've got a good income, you've got some money in the savings account, or you got money in IRAs or wherever it may be. Being a passive investor can get you a very long way in a shorter period of time in many, many cases. And I think this is something that we need to look at, that I think more people need to look at as they look at real estate investing. But we've got to be educated in what we're jumping into before we do it. And we'll talk about that more as we go on too. But then I also know guys that they want to be they want to hold active deals, but sit in a passive role, which you can do that. There are a lot of ways to do that, but you're probably going to be paying more for your properties when you're in that situation. You're going to have other factors that you're going to have to think about because you're not taking on any of the risk of doing any of the work to get that property taken care of. So someone else is going to be doing that, and you're going to pay for that. That's going to cost you money to do that. So we just kind of need to keep that in mind as we're doing that stuff. So something else I think that we need to determine, as far as what kind of a real estate investor we want to be. Do we want to be a momentum investor, or do we want to be a value add investor? And let me kind of explain that. So a momentum investor is going to be someone who is going to invest in a deal that is a pretty stabilized deal. And that can come in a lot of different forms. Stabilized deals are more of your syndication type investments. Getting into funds are more of a momentum play because we're not going to be adding value. We've already created the value in the beginning of that fund. Getting into turnkey properties. I know several. I don't know several. I know one investor that they build properties brand new, and then they sell them turnkey rentals to investors. So they're not adding any value. You're not going to be adding value to that property in the short term. You'll add value over time. But what we have to keep in mind in a lot of these scenarios in a momentum play, you're obviously, if you're buying properties, you're going to be paying a lot more. In many cases, you're going to be paying retail or very close to retail. So in that scenario, you're probably, depending on how you're getting your financing, you're going to be putting a large amount of money down on that property. It could be 20%, could be 25%, maybe even 30%. Just depends on whatever lender you're using in that scenario. And then you've already got a stable property, so you just need to maintain that property and keep it stable over a much longer period of time to start recouping that money back. Nothing wrong with it if that's your method, but there are factors involved in a momentum play like that I always try to have people look at, because are you how old are you? Do you have time to let that run out, that time frame run out, so you can get that improve that value back on that property? And then we have our value add investor. So that's what I am, and that's what I've always been. I want to buy them beat up. I want to pay as little as I have to and add value back into that property. I don't like bringing money out of my pocket. I want money being sent to me when I close. I've always liked that method. I've always been good at that method. Not everybody's good at doing that. So we have to kind of determine where we kind of sit as we're trying to evaluate what we want to do as an investor and what's going to work best for us. Like I say, we're all different people. It's going to work differently for all of us. There's no right or wrong. It's just, who are you and how does it work best for you? That's how I think you should think about it and look at it. And once you determine that, it's not me determining it, it's you determining it, then it helps you to, as you're putting your plans together of how you're going to become a successful investor, These are steps that I think we should always look at. So building a business plan on the type of investing that you want to do. So let's just take that, what I just talked about there, and take it kind of to the next level of how I think you should set yourself up to be able to have much better chance of having success. First thing we always need to do is set some goals, set some parameters. What is the goal that we're trying to get to? I think we always have to start with that in mind. What is our end goal that we're trying to achieve? And then once we know what that is, based on whatever strategy we want to use, we put those goals down on paper. Now we've got something solid that we can look at, and we can start putting our plan together in reverse of the steps we need to take to get to that end goal. It's like I was talking about at the very first slide. We're talking about wholesaling, rehabbing. Those may not be your end goals, but they're where we start in many cases. And when we finally started and did that, we had this plan. We put our plan together, and we put our plan out 5 years, and we worked that plan backwards, which we have done. And now we're way past that 5 years, and that plan has changed tremendously. And the way we set it up has changed tremendously over the years. But it really gave us a good roadmap to follow to really help us make some accomplishments. It helped us set milestones as we moved along this path, which was extremely helpful. It helped us to we could chart out exactly where we were at different stages with different activities. But it all started by getting that plan down and those goals of where were we going. That's where we had to start. Then let me see where I'm lost my. Then once we get all this put together, and we have all these goals written down, and we have our plan in place, now it's up to you as an individual, or you as a team, your husband and wife team partnership, whatever it may be. Now you have to take the action to make this happen. And as I always stress, once you have that plan in place, you've got to follow your plan. Don't go other directions. Don't veer away from your plan. Always follow your plan. Be consistent with it. Be committed to it. And you're going to have forward momentum by doing that. I think that's extremely important, that we don't chase shiny objects, that we don't, you got to put the blinders up. You got to focus on what you're doing and ignore all the nonsense going on around you. Because as I think we all know, there's lots of nonsense going on around us, and we just have to ignore that, not pay any attention to it. It doesn't matter what the other guy's doing. It only matters what you're doing. And that's who you have to focus on, is yourself, not what other people are doing. It doesn't matter what other people are doing. Who cares what they're doing? And I think the better you can do that, you're definitely setting yourself up to have much more success in your business. Whether you're doing this full-time or part-time, it doesn't matter. I think it's important to think that way either way. And I think you can have success by following some of these steps, whether you're full-time or part-time. If you set that plan up and then you follow that plan, you commit to that plan. And those were things that were really key for us as we started getting into this. And then as we started having success, that focus just became more and more fun, because we were having success. We were seeing that we were moving forward in our plans, and we were making progress going from one plan, from one stage of our business to the next, which I think is, once you start seeing that, it changes the way you think about everything. So creating some investment strategies that work for you. Let's use some examples here. You want to buy rental properties. So if you want to buy rental properties, how are you going to find those deals? There's a variety of ways we can go out there and find deals. What are you going to do? Are you going to work with realtors and try and find deals off the MLS? When I first started buying rental properties back in 2002, that's what I did. We sent out offer after offer. Sent out offers. God, I don't know how many offers we'd send out a day. That can be a very good strategy if you find the right realtors to work with. That's very, very key, that you find the right realtors to work with, or the right realtors to train to work with you is even a better way of putting that. You want to own rental properties, however, you don't want to rehab them or manage them. I know a lot of people that feel that way. They want to have the rental properties, but they go, man, I don't have time to rehab. I don't know how to rehab. I don't want to do all that nonsense. Nothing wrong with that, but you're going to have to find somebody that will do that for you. If you don't want to manage them, then you got to find somebody to manage them for you. So if you do that, then it's going to cost you more money out of pocket to do that. It's not necessarily a bad strategy. It just depends on where you are in life. Age, I think, has a huge thing to do with it. Are you raising a family? There's millions of different factors that you have to think about in your personal situation. But if you put that down and figure that out and put your strategy of how you're going to do that, put your plan together and follow that plan, I have every bit of confidence that you can have success by following your plan and doing that. In a lot of cases, you want to lend money. I know a lot of people that want to lend, they want to put money out on the street, but they don't trust any of the people that they're meeting. Well, this is really a common thing out there for a lot of different reasons. Because, well, it's very common because there's a lot of people that lose a lot of money trying to lend money. I see it happen way more than I wish I did. Unfortunately, I sit in a position where lots of people come to me who have lent their money and they're in a bad situation. The deal's gone bad. The deal's going sideways. What do I do to get out of it? And that all starts with, vetting that deal and your borrowers from the beginning, which we'll talk about more in a minute. And this is, we lend a lot of money now. So we have set up, we have a very strict criteria that we follow when we're vetting a deal, when we're vetting a borrower. There are certain things that they're going to have to provide to us to give us a comfort level to want to work with them. At the same time, since we are very good at running numbers and doing all that stuff, I know when somebody's bringing me a deal that's a solid deal. I know when somebody's bringing me a deal that's not a solid deal. And if you're not in that position, you're not at that level yet, then you're going to have to find the people that you can work with to help you with that. Very, very important that we do that. And then if you want to find investment opportunities to put your money to work in, it's really, really important that we find investments. And I won't say so much investments because that can be very subjective depending on what the investment is. I would say more of the investor. We've got to find the investors to work with that have good, solid track records of how they've done business, of how they've taken care of their investors over the years, time and time and time again. That's key. When you want to put your money to work, that is the most crucial part of any type of investment opportunity. Even more so than the deal, who are you working with? And like I said, I'm doing a lot of consulting with a lot of people on that very topic right now, and very happy to be able to do that and make sure that they're getting into good investments with the opportunities that are being brought to them. And if we can do that and learn how to do that, then we can certainly put our money to work in some great investments out there. That's certainly what we do for ourselves, and we do that with all the investors that we put their money to work with as well. So finding potential opportunities. If you want to buy rental properties, then you're going to need to market to find those deals. So we touched on that a second ago. So what's going to be our method of marketing for those deals? We talked about, are we going to work with realtors? Are we going to try and work with wholesalers? Now, I think, we can train wholesalers bring deals to us with the numbers that we need. But we can also go out and find these opportunities ourselves. We can market to sellers on our own as well. And there's a variety of different ways you can go about doing that, which we can talk about. That's a whole presentation all by itself, so I'm not going to go into that a ton. But we've got to put a plan together of how we're going to find those deals, and it's going to be based on our criteria. It's going to be based on the cost of our money. There's a lot of factors involved, so we have to kind of break all this stuff down for ourselves as we're putting that plan together. And then, do you plan on buying these properties and paying on them for 30 years, paying on them for 20 years, 15 years, 10 years? What's your plan with your financing? Can make a big difference. If you want to lend your money, then you're going to need to go out and find borrowers that you can trust. So how do we go out and find borrowers we can trust? So like I had mentioned, for us, we market to everybody that will lend money, but we've got a very strict criteria by which we lend. The unfortunate thing with most private lenders that we have seen is, and more so with new private lenders, if you're an experienced private lender, not so much, but with new private lenders, some of these folks with some of these deals, they love to get you excited. Like I said, we raise a lot of money for a lot of different things we do, but I also have lots and lots of people come to us with their opportunities. And they come, in all shapes and sizes, and some of them are very excited, some of them are very energetic. And they what looks good at the beginning, I've got questionnaires. I ask for certain information. And if they can't provide that information, well, then chances are that investment's a lot more talk than reality. And we have to make sure that we're doing that when we're going to put our money out there, especially if we're going to be lending our money to someone in any shape or form on a deal. I want to get their information of what the deal looks like. I want to find out more about who they are. But then I'm going to do my own due diligence. I'm going to listen to what they say, and then I'm going to verify everything that they tell me. I was on a panel at the Quest Expo, and Jeff Watson, the attorney who was on the panel, I was on the panel with, had a saying that I just absolutely loved, and I'm going to share that with you. He said, "In God we trust, everyone else we verify." So you need to really, really take that to heart and really keep that in mind when we're in a situation where we might want to be lending our money out. We might want to be putting our money into an investment. God's the only one we trust. Everything else out there in this world, we've got to verify it. And I believe that 100%. So take that and keep that in your back pocket without a doubt. Finding investment opportunities that you can keep your money working for longer periods of time, I think are, for me now, especially where I'm at in life, I think that's a very, very important way to secure your money. I won't say, we can't ever say that an investment's 100% safe. We can, but I do believe there's safer investments, there's riskier investments. And, I would rather take a little bit less on an interest rate if I feel much more comfortable with my money working in a particular investment. And I think that's something else we need to think about a lot, because I know that everybody tends to get all excited about all these gigantic interest rates that people throw out there. But we oftentimes forget to look at the risk involved in that investment. Now, obviously, we're always going to hear in public or on Facebook or on wherever about these great, great deals. But if you're working with a large company, in many cases, you're never going to hear about the bad deals that they have happen on them. And in a lot of those cases, there's way more bad deals than good deals. I've seen that personally many, many times over the years. So I just always tell everybody to be cautious about that. This is where doing your due diligence is very, very important. and you've got to make sure that you are very comfortable before you jump in. Don't get excited with big numbers. Like I've always said before, if it seems too good to be true, oftentimes it is. And so you need to protect yourself, and that's what that's all about. So analyzing opportunities that come your way. Do you have the tools to analyze deals? So and this is going to come true in any form of what you want to do. If you want to buy houses and flip them, if you want to buy houses and keep them as rentals, how are you analyzing that deal to know if the numbers are correct, to know if the numbers are good so you can buy that deal or you want to buy that deal? Where are you getting that information from? If you're running your comps on free stuff that's on the internet, your numbers are never going to be accurate. Numbers are never going to be good. I don't ever trust those numbers. You have to know how to run your comps from MLS, and there's a couple other services out there that are paid for services where you can run comps. You just need to learn how to run comps based on their system, and take in all the factors that come into play if you're going to buy a house and you want to flip it. And there's lots of other factors that never get talked about, especially when somebody's throwing out deals to try and get you to buy them from a wholesaler, for example. So you need to know about your holding cost. You need to know about your closing costs. You need to know about your commissions. You need to take all these things into consideration before you buy that deal. If you're going to buy an 80% deal and think that you're going to flip it and make money, you're probably mistaken. It's very difficult to even break even on an 80% deal that you're trying to flip, unless that property needs very, very, very little work done or no work done at all, which is really just not the reality of flipping a house in most cases. So you've got to be able to have those tools so you can analyze that deal and know, if it's coming to you from a wholesaler, your ARVs are always going to be high. Your repairs are always going to be lower than they really are. Just know that that's the case. And when you have the tools to analyze that deal, then you'll know for sure. If you might need to go out and make friends with realtors. You might need to come to people like myself, that I have a group of people I analyze deals for all the time, and make sure that we're going into good deals. Very, very important. Having systems in place on vetting people that you're working with. Now, this is going to come into play, obviously, if you're lending your money. There's people out there on the internet right now that I see all over the place talking about how great they are with their fancy cars, flash $100 bills, or whatever, a bunch of stuff like that. And but I know that most of those guys have judgments against them, have lawsuits against them, have lost people's money, have ripped people off. You've got to be very cautious of that. And I know we've talked about that earlier on, but I'm always going to go back to that, because I really hate it when you guys come to me and you're in this type of a situation, because it's generally very difficult to get out of that type of a situation. And it generally never comes out on the pretty side. So just make sure that you get those systems in place. Like I said, I'm doing tons of consulting on this right now. So if you have questions, you can always reach out to me and I can go through all that with you as well. Having a criteria to follow. I think this is something I think we should do no matter what we're doing, whether we're buying houses to flip them, buying them as rental properties, lending our money out, getting into investments of syndication funds, whatever it may be. You need to put together a criteria of how you want to invest. The key then is you've got to follow your criteria. And if you're going to veer off your criteria, you've got to know the parameters that you can go off of your criteria and never go outside those parameters. This is one of the things I think that's helped me so tremendously over the years, is by man, we've got a criteria on everything we do, for buying properties as to flip, to buying properties for rental properties, for selling properties owner finance, for lending our money out, for investing in other opportunities. We have created criterias for each thing that we do, and we follow that criteria. And if it falls outside of that criteria, we just simply say no. Never be afraid to walk away from a deal. There's always going to be other deals out there. No matter what, there's always going to be deals out there. So never, ever, ever be afraid to walk away from a deal or say no. Never be afraid to. And I can't stress that enough. If more people said no, then maybe we would get some of our numbers back to better places, because then some of our wholesalers or things of that nature would have to change the way that they're doing business, because people are telling them no all the time. And that would be a very good thing for us. That would be very beneficial to us. Sorry, I had to get a drink there. So funding your deals. So have you thought about how you're going to fund your properties? If you're going to be buying rental properties, if you're going to be flipping properties, how are you going to fund these deals? Because different types of funding comes with different types of rules based on whoever that lender might be. So if we're going to use conventional financing, which is really quite common, probably the most common way for people to buy rental properties. And when I say the most common way, I'm talking about if we look across the United States for people that buy rental properties, most people that buy rental properties are not educated in real estate investing like you and I are. They haven't taken the time to take classes and go to seminars and do all these things that we do to get really good education about how real estate investing really works. And the most common way to finance most of these deals is through conventional financing. Now, you've got a lot of rules when you're using conventional financing. First off, it's government-backed money, so you're going to be following government rules. In many cases, if your property needs more than $5,000 in repairs, they're not going to lend to you. And that's going to be found out when the appraiser comes out and appraises that property. If you're using conventional financing, when you get to 10 properties, you can't use conventional financing to buy any more properties. 10 is your limit. That was set in the Dodd-Frank with Obama era. Those rules were put in place. So, I want to own a whole lot more, and we do own, and we've owned lots and lots more than 10 properties, but we've never used conventional financing to do that. Now, we can go to our local banks. When I talk about our local banks, I'm talking about our small community banks. I'm talking about maybe some of our credit unions. Credit unions, we've personally found to be a little bit harder to work with. But we've got some small banks that we've done business with, done some, a variety of things with over the years. And that can be a very good resource for us. Excuse me. But they're going to have lots of rules and regulations that you're going to have to follow. And, but if you're going to be going to your big banks, your Chase, your Wells Fargo, Citicorp, all those types of banks, forget it. They're going to shut you down in a heartbeat. They don't like working with little investors like us. So I would never suggest that. We've got hard money lenders, can play a major role in helping us maneuver through this. If we're going to use them to take down our properties so we can rehab them and then refinance it out, they play a major role in our industry, a major role. And then what we've always used, which we think is even better yet than hard money, is our private lenders. I think if you know us, you know that we've always used private money. If you're new to listening today, then we have always used private money. We've never used conventional financing. We do work with banks on different things. Never have used any of the hard money guys. No, most of them out there in our local area here. But I mean, we could go use them if we needed to. Which is very good to know, because if I had to go use them, I would use them in a heartbeat. I just have never needed to do that. We've always been able to raise money for all of our deals, both short-term and long-term. I know that most people don't think you can get long-term private lender financing, but I'm here to tell you the difference. we have lots of rental properties. We have owner finance properties. We have a variety of different things that we work with private lenders, and we keep their money working 24/7, 365. And they absolutely love that. So it's all in knowing how to have those types of conversations based on what you do as an investor to determine this. But if you're going to be buying things, not putting your money to work in this scenario, this is going out and buying investment properties. You're going to have funding of some sort. So now is the time to be thinking about that. Now is the time to be setting that up. Like I said, I think we've got some great opportunities potentially heading our way going into next year. So a key to that is having your funding ready. You want to be an effective investor, get your money lined up. Get your money lined up now. It will benefit you tremendously, because when things do happen, if things do happen, now you're in a position to move quickly. You're not starting from the beginning. And we've got lots of money set up to move forward if we need to pull the trigger. And that's where you need to put yourself. You need to put yourself in that position. So managing rental properties. This is something else. I think if we want, we need to really look at this, because rental properties are very popular, and there's nothing wrong with. We love rental properties. Like I said, we've had rental properties for over 20 years. Excuse me. So, I obviously like having rental properties, but there's some things that you need to think about when you have rental properties. Somebody's going to need to manage those properties. So who is that going to be? Do you plan on self-managing, or do you plan on hiring a manager? Now, there's tons of pros and cons on this subject, depending on who you're talking to. And I'll give you my 2 cents on it. First and foremost, no one will ever take care of your properties as good as you will. So if you're going to self-manage, that's something that we think about. Now, we do have a manager, and we've been working with our manager for over 15 years. But if you're going to self-manage, now you have to think of a whole lot of other things, because there's a whole lot of laws out there in regards to managing properties, to being the landlord. And you are going to have to know what these laws are, and you're going to need to abide by them. There's very specific laws on evicting tenants. There's very specific laws on screening tenants. There's laws on when a tenant moves out and giving their deposit back. And those are just some of the simple laws. There's lots of very complicated laws that I don't even know, because I don't have to deal with that. My manager deals with that. But these are very important things that you've got to think about having rental properties. Now, also, are you going to do long-term rentals, or are you going to do short-term rentals? Because it's a totally different game. A totally different game on how you set that up. And especially from a management standpoint, if you're going to be doing short-term rentals, to me, you've got to have the right type of a manager that really knows that area where you have that short-term rental, because you're going to have reviews. You're going to websites. You've got to have all kinds of stuff to keep people coming back to your place. You've got to have 5-star ratings. It goes on and on and on. Long-term is going to be a little bit different, but you still have to, we got to put tenants in those properties. Have you ever dealt with tenants before? Unfortunately, I have. Tenants are a pain in the butt, no matter how you shake it. So, having these plans in place, having an idea of what you're going to do and how you're going to do it is super, super important when it comes to the management side of having properties. And I will say that, the great thing about having rental properties is this is one of the greatest ways to build wealth but there is. And this is one of the things that we've done and been able to build lots of wealth by owning lots of rental properties. The more you own, the more wealth you can build. And that's a very good position to be in. But it's not just that. There's all these things that come with it. Rental properties are a lot of work. There's always maintenance on rental properties. There's always something. So, think about this as well. And the more you can plan this out, even before you get there, the more effective you're going to be when you get there. And that's why I want to point this out, because it's really important that we're effective at this point. If we're not effective, then we might be getting ourselves in trouble. So doing JV partnerships. Now, this can be a very, very good way to get out there and get started. Have you ever considered partnering with someone who might have experience that you're lacking? And what we've always got to keep in mind, I don't care who you are or what level you are, there's some things that we all always lack that other people are much better at. And there are things that we're much better at than other people are. So how can we work together with people to bridge that gap? Help each other so we can both have success. It's actually, in many cases, a very good position to take. And, I would rather have a piece of the pie and have success than say, no, I'm not going to do that and walk away with nothing, never get anything to start with off the ground. So, JV partnerships can be very effective done correctly. So why would you want a partnership? Well, we just talked about that, because you may be new and not really know how to do something. You may not have ever rehabbed a house before, but you found the great deal. You might have the money, but you don't have the experience in rehabbing the property. I mean, there's a million different things that we can partner in with JV partnerships that are very, very beneficial. So, I think that this is a great way to reach out, especially if you're newer in this business, and find the right people to work with. Find the right people that are willing to partner with you on the right deal, because not every deal sets up to partner on. We can sometimes partner on a deal for experience, but we might not be making much money on that deal. So we have to look at all that stuff when we partner, and by working with the right person that can run the numbers for you, that can lay the whole strategy of that project out, you're going to know that going in. You're going to, okay, we'll walk away with a little bit, but we're not going to walk away with a bunch of money here, but you're going to get, you're going to get a lot of experience out of that. That could be a good thing. I've been in that. I've done that before with different people, with different students I've had, and made it a win-win for each other. We didn't lose money, so that was a positive. That's always a positive when you don't lose money. So, but that's something to really think about, JV partnering. Growing your businesses with JV partners. When you do a JV partnership with someone, you're going to be partnering on specific deals. This is not becoming a partner in someone's business. I think sometimes we get a little turned around in our heads about this. I'm going to JV partner you with, now you're going to take part of my business. No, it doesn't work like that. A JV partnership is going to be based on a specific deal that you or that other individual have. So both sides are going to need to be bringing value to this deal. So that's a real key in a JV partnership, is who's bringing what value and who's doing what. So someone brings me a JV, wants to JV with me on a deal. I've got the experience. For the money, I've got the experience with the rehab team, but they've got the deal. So we're both bringing value to that partnership in that scenario. And so how can we make it work for each other? Well, as we write up that JV agreement, it's going to spell out the terms of what we're doing. If you have a good JV agreement, it's going to have the duties of who's doing what in the agreement. And these are key elements in that partnership. it's based on this specific property. This is your duty. This is my duty. This is your duty. This is my duty. Or whatever the case is. I'm bringing the money. You're doing this, whatever that may be. But you spell it all out on that partnership. Everybody signs that partnership, and I think it's actually good to have it notarized as well. It just helps solidify that it's a good partner. It's a good document. Whether the partnership works or not, that's yet to be known. But we've done this. We do different types of partnerships on different types of deals with different individuals, and it can be extremely beneficial for both sides, and we can all grow tremendously and go a very long way with it. So I always encourage looking at this method, and especially if we're newer at doing this, even if we're experienced doing this, but we still lack different talents like all of us do. It's about being more effective in our result at the end of whatever that deal is. And this is things like this this is what makes us more effective. This is what gives us more experience. This is what teaches us what maybe not to do next time. There's all kinds of lessons to be learned in these things. And the more lessons that we learn, the more experience we get. And going into our deals in the future after that, taking that knowledge and that experience and making each deal better and better every time we get into it and every time we do it. So I think JV partnering can be very beneficial in the right situation with the right deal with the right people. Being a real estate investor is about building wealth. Your goal should be putting your money to work. That should always be the end goal. Like I said, we don't start off there, as we talked about in the beginning. We never start off at the end, but we got to get to the end. And once we start getting to the end, putting your money to work is the ultimate goal for all of us. It's a wonderful, wonderful place to be in real estate. Building equity from rental properties. We've got a very strict criteria on how we buy rental properties and how we bought them over the years. And we've built tons and tons of equity in those rental properties. That's building wealth, guys. That's building a lot of wealth. It's you look at your balance sheets, you look at your net worth sheets, and you start putting yourself in a very, very strong position. And that's what this is all about. At the end of the day, it's about building wealth. Maybe owning paid off properties and living off the cash flow. I know people that do this. I know people that have enough properties, and of course, when I do my rental presentation, I go into this a little bit and talk about the difference between having paid off properties from a cash flow perspective, having paid off properties and having a wrap mortgage on a property and still owing on a property. The difference in that cash flow can be huge. The difference can be you retiring on cash flow and you not retiring on cash flow. So we get those properties paid off, living off cash flow can be a wonderful way to have built that wealth to where we don't have to work, that every month we have enough money to pay our bills, to live the lifestyle we want to live off of cash flow. Wonderful place to be. And then, as we've been talking about a lot, lending your money and growing that money from interest payments, depending on where that money is, whether if it's in a Quest account, rolling that money back into Quest and keeping that money working. That's really the key to if you're going to be lending your money. The biggest key to that is keeping that money working. And if it's not working like you want it to be, then maybe that's the stepping stone for you as a private lender, to lend your money until you get to a point where you can invest that money into bigger and better opportunities for you. Who knows? Just a lot of different scenarios that can really work well as long as you put that plan together and focus on that plan, commit to it, and then take the action and make it happen. So here's kind of an overview of what we've gone over today. Finding investment programs that work for you. That's where we really need to think about, really need to start. By putting a plan together, by seeing where we are, who we are, where we want to go, that's how we're going to find those programs that work the best for us. Funding your deals if you want to buy a lot of stuff, and I love buying stuff. So, funding is everything. We have to know how we're going to be able to fund the deals to get us to where we need to go. JV partnering with people. JV partnerships can be a very, very positive avenue to help us grow from a knowledge standpoint, from a building wealth standpoint, all kinds of ways. So this is something that, I encourage you to check on this with different opportunities that are brought with you. This doesn't work for every opportunity by any means, but when the right opportunity comes and it works with it, this could be a great avenue for you. And, building wealth is a long-term investment. Building wealth does not happen overnight, and it will never happen overnight. We have to put a lot of thought into it. We have to plan out how we're going to do that. And then, like everything above, then take everything and put it into action, follow that plan, commit to it. And I keep saying that over and over, but it's the truth. Commit to it, and then put your blinders on and focus. So that's what we've got today, guys. Again, here's my contact information. I think most of you probably already have it, but if not, you can always get in touch with us at the Wealth Club. Let me stop my share here. Let me find where my camera is. Boom, there it is. All right, and as you can see, I'm sitting in our new office today doing this workshop. So my setting behind me is a little different. My pictures that were always behind me in my other office are not there. I got my sailfish up in this office. So Angie, do we have any questions?
There's no questions at this moment.
Okay. Well, as always, guys, if you have any questions, you need anything, you can always reach out to us, and would love to talk. Let's see how we can help you, and hopefully I gave you some good things to think about today, and you can go out and put some of this stuff into action for yourself, plan some stuff out for yourself, and go out and have wonderful success. That's what we always want to see. So yeah, like I said, we've got another workshop on the 30th, November 30th. So we won't be seeing you until then. So everybody that's on, everybody that listens on the replays, have a wonderful, wonderful Thanksgiving. Be with family, friends, eat a lot of food, and just have a really good time. And until then, we will see you on the 30th. Bye, everybody.